Good afternoon. This is Todd Horwitz, coming to you from the floor of the C Group in Chicago. And of course, as we've been following for quite a while, we've been following the Ultra Bond because we're looking for the biggest kick. And of course, we know a couple of things. We know that rates are rising, and we know that from the overall news from the Fed. We know what's going on, and we know that that's going to continue. Now, recently we've seen a little bit of a rally up in the bonds, only to be met with sellers. So we saw rates actually fall when they're supposed to be rising, which they will start to rise. But what you're really seeing here now is a market that has no fear. And when we talk about no fear, there's a lot of ways that we look at fear throughout markets. And one of them is, what are the bonds doing? If there's fear in the equity markets, there's fear in the multiple economies, then usually bonds are running a little bit because that is a great safe haven play. Well, we can see that around the globe, nobody's afraid because bonds are not going up, they're going down basically. And here's where it can get really ugly. We are going to see a rate increase. And what's going to happen here is you've seen a lot of, as we saw that big rally up that we were looking for on the short squeeze, I think now you're going to see a push down to the lows. And I think, again, we talk about this 37-year bull market is over in rates, and which means in bonds. So that means bonds will go lower, rates will go higher. And that's really where we're going to head to. As long as we continue at this pace, there is no reason to believe anything else is going to happen. So we're looking to test the overall lows here as we continue to work our way lower. You'll see some bounces in between, but look to sell every rally. That's the way I see it. This is Todd Horwitz, coming to you from the floor of the CME Group in Chicago.